With our next guest, and he suggests consumers will not let inflation dampen their holiday spirit. Steve Sadov is the former chairman and CEO of Saks. He's now a MasterCard senior advisor. And Steve, no doubt, listening intently to this conversation. I hope my point about retailers and their timelines made some sense, because as you know better than anybody out there, if I bought something at Saks in August, Saks didn't buy that in late July. They probably paid for it back in April or May. So much was priced out before inflation really hit. Third quarter, maybe not that great of a representation about costs. Are you worried about what we're seeing now hitting margins and pricing 3 and 6 months from now?
Well, good to hear from you, Brian. And I'm worried. Look, I feel very good about the consumer right now. The consumer shopping growth is in the double-digit range versus 2 years ago. We're seeing a healthy holiday season. The MasterCard spending forecast is for 7.4% for the growth for the holiday season. Thanksgiving week at 10%. The consumer and the numbers today were very, very compelling. The question that you're raising is a longer-term one. You're right. The goods that are being shopped today were bought earlier. However, consumers paying a higher price partly because there's less discounting. Remember, because of the supply chain issues, you have probably 5 to 10 percentage points less promotion than you did a year ago. You could have higher prices down the road, but if you have more promotions going on, the net effect on the consumer wouldn't be any different. So it's not just a question of the input price being paid, it's the amount of promotion and the net realized price that the retailer's getting. I think that right now we have a situation where it's a little bit of Goldilocks for the retailers because, as Karen said, the brands that have pricing power and that are able to pass on the cost through to the consumer are getting better margins. You're seeing some of the best margins I've seen in a long time. So you have good margin capability for those brands that have pricing power. They're going to continue to have supply chain cost increases, but if they're able to pass them through, like the examples you used of Capri or Tapestry, and there are a lot of others, the consumer is going to, and right now it's showing that they're willing to pay the price. They have money in their pockets, whether it's at the low end because of the government support, the rise in the wages, or the higher end because of the strength of the stock market. And the stock market gains, there's an enormous correlation between the high-end market in terms of the luxury consumer and the performance of the stock market. So I feel really good for the very near term. I think as you get into next year, you're going to have government support overlap. You're going to have a little bit more in the way of headwinds. But the next 6 weeks, I think, feel very good about the holiday season.
Steve, it's Karen. Thanks so much for being on. So another headwind I've been thinking about is, millennials are sort of the biggest buying group. They used to like to do experiences and services, maybe more than buying things, but that hasn't been, as relevant during the pandemic. We're coming out of that now. Do you see them shifting those dollars away from things back towards services?
I think, Karen, it's an extremely interesting question because during the pandemic, everyone was nesting. They were staying at home and they were buying groceries or home improvement, focusing on the stay-at-home activity. And if they were buying apparel, it was probably athleisure sweatpants. Now, as you're into the reopening of the economy and the experiential, so restaurants are growing in the 30% range, apparel growing 50%. I mean, these are remarkable numbers in the reopening. But what you're finding is that those categories that were growing during the pandemic, use the numbers coming out of a Home Depot this morning, the home, the hardware, the grocery are continuing to hold up. So what's surprising is that it's not a fall off of one versus the other. It's one and the other. Look at the e-commerce. E-commerce grew 50% during the pandemic. You're not seeing e-commerce going down. You went from 12% of commerce to 18% of commerce, but it's still growing 7 or 8% versus the higher number. So it's not either or, it's either and.
Quickly, before I let you go, Steve, any company you think right now is just absolutely killing it and maybe not getting the love they deserve?
Oh, I don't want to play on individual companies. I think the big box guys who are playing Omni-channel are doing a terrific job, and I think they're going to continue to do really well.
I think we might be able to figure some of those names out. Steve Sadov, we appreciate it. Thank you. We'll see you again.
Thanks.
All right. So let's go around the horn and trade this. Steve Grasso, you heard that. I mean, I heard you talking about, Capri Holdings, not the island, the parent company of Michael Kors, and some others. Did anything Steve have to say change your mind?
A little bit. And it's not really changing my mind. It's reinforcing the fact that he thinks that the next couple of weeks, I think specifically he said 6 weeks, he feels pretty good about. And I agree with that. Everyone's waiting for the other shoe to drop, and we keep passing this buck a little bit further. But, it's interesting when you did his intro, it makes me think about MasterCard and Visa, and they're struggling to stay positive on the year as far as year-to-date performance. But when you look at American Express, it's up 50%. So what we didn't talk about was the buy now, pay later. And I think that's really having, whether it's perception, reality, or both, it's having an impact more on these debit names versus credit names, like a name like American Express. And with travel coming back, Brian, and corporate travel, and maybe people are taking trips to Capri, maybe you want to be a buyer of American Express, even up 50%.
Maybe you can buy a Capri, the 1970s sports car from Mercury. Who knows? Just be careful with buy now, pay later, because those $10, $50 a month charges can add up.